Welcome to Investify, where we unravel the complexities of the financial world. Today, we're diving into a topic that touches your wallet more than you might realize: the US dollar's reign in the global financial arena. Let's start with a bit of history. For decades, the US dollar has been the undisputed champion of the financial world. Post-World War II, this currency rose to prominence, embodying stability and reliability in international trade and investment. But what happens when a giant shows signs of faltering? Recent tremors in America's financial landscape hint at potential upheavals. We're here to explore these seismic shifts and their implications. Now, let's talk impact. Imagine this. Central banks across the globe cling to the US dollar like a financial lifeline, with a staggering 60% of their reserves parked in this currency. Think of it as a massive vote of confidence, a testament to the dollar's might. And it's not just about holding reserves. When it comes to the nitty-gritty of global trade, loans, and debt securities, half of these transactions are invoiced in US dollars. That's right, 50%. This isn't just a currency, it's the backbone of international finance. But even the mightiest can face challenges. The year 2014 marked a turning point. Russia and China, two global powerhouses, decided to challenge the status quo. Frustrated with Western sanctions, they initiated a bold move to de-dollarize their business dealings. It was a statement, loud and clear. No single nation should wield unchecked power in global finance. And it wasn't just Russia and China. The BRICS nations, Brazil, Russia, India, China, and South Africa, began to ponder over alternative currencies. This wasn't just a financial decision, it was a geopolitical chess move. Together, these nations started to question the dominance of the US dollar and explore new avenues in the currency landscape. As we delve deeper into this financial saga, remember, the world of money is more interconnected than ever. What happens in one part of the world can ripple across continents, affecting economies and, yes, your pocket. Stay with us as we navigate through these turbulent financial waters. But before we move on, I have a question for you. Do you think the US dollar can maintain its global supremacy in the coming years? Share your thoughts in the comments below, and if you're finding this video insightful, don't forget to subscribe to Investify for more engaging content. In our journey through the financial landscape, it's crucial to turn back the pages of history. The year 1944 was a turning point. Amidst the remnants of World War II, the Bretton Woods Agreement catapulted the US dollar to a new height, the world's reserve currency. This status wasn't just a title, it became the cornerstone of international trade, anchoring global economies in the process. But as with any great power, criticism is inevitable. Over the years, the US dollar has faced scrutiny over its value and the policies surrounding its use. Critics argue that the reliance on the dollar gives the US disproportionate influence in global affairs. It's a delicate balance of power and responsibility, one that's constantly under the microscope. Fast forward to recent trends, and we see a different picture. In the past 2 decades, the US dollar has lost over 12% of its market share. This shift is not just a number, it's a signal of changing times. The British pound sterling, the Chinese yuan, the euro, and the Japanese yen are emerging as formidable players. Each currency brings its unique strengths to the table, challenging the once uncontested reign of the US dollar. One vocal critic of the dollar's dominance is Robert Kiyosaki, the author renowned for Rich Dad, Poor Dad. Kiyosaki often highlights the issues with US economic policies and their role in the dollar's devaluation. His perspective sheds light on the complex dynamics between national policies and global currency valuations. And then, there's the global shift in currency usage. The BRICS nations are not just sitting back, they're actively exploring new currency avenues. This move is more than economics. It's a statement of independence and strength. For instance, Russia and India are considering using the rupee in their trade transactions, a move that could reshape traditional trade routes. Moreover, other nations are gradually distancing themselves from the US dollar. Saudi Arabia, China, and Brazil, for instance, are exploring transactions in currencies other than the US dollar. This shift is significant, not just in terms of economics, but also in the geopolitical narrative. It's a world where financial power is no longer concentrated in the hands of a few, but is becoming more distributed and diverse. As we navigate the shifting tides of the global economy, let's focus on the future. Predictions and investments are at the heart of our next exploration. And when it comes to forecasts, few voices are as resonant as Robert Kiyosaki's. Known for his financial foresight, Kiyosaki paints a picture of a looming global economic crash. But it's not all doom and gloom. Amidst this predicted chaos, he sees a rise in alternative assets: Bitcoin, gold, and silver. Kiyosaki's projections are bold, to say the least. By 2025, he anticipates Bitcoin soaring to an eye-watering $500,000. Gold, a timeless symbol of value, is expected to reach $5,000 per ounce, while silver could climb to $500. These numbers aren't just guesses. They're based on a deep understanding of market dynamics and a critique of current monetary policies, particularly those of the U.S. Federal Reserve. Kiyosaki argues that the Fed's approach to money printing, what he dubs fake money, is a key factor driving the devaluation of the US dollar. Now, let's consider the potential impacts of a dollar decline. A decrease in demand for the US dollar could have far-reaching consequences. One immediate effect: inflation. As the dollar's value dips, the cost of living in the US could rise, squeezing budgets and tightening belts. Think about it. When your currency buys less, everything from groceries to gas gets pricier. But the ripple effect doesn't stop there. Borrowing costs could surge, making loans and mortgages more expensive. Savings might yield less return, impacting long-term financial plans. And let's not forget imports. A weaker dollar means higher prices for goods from overseas. This isn't just an economic shift. It's a change that could touch every aspect of daily life for millions. As we analyze these scenarios, it's essential to remember that these are not mere speculations, but possibilities based on current trends. In the world of finance, being forewarned is being forearmed. As our exploration nears its end, let's pivot to the market implications of these currency shifts. One key area to watch: commodity prices, with a spotlight on oil. The energy market, already known for its roller coaster dynamics, could see heightened volatility. This fluctuation isn't just a statistic. It impacts everything from the cost of fueling your car to the price of heating your home. But with volatility comes opportunity, particularly in the realm of commodities. As traditional financial systems undergo transformation, commodities could emerge as a haven for investors. Whether it's precious metals like gold and silver, or essential goods like oil and agricultural products, these tangible assets offer a potential hedge against currency devaluation and inflation. For the savvy investor, keeping an eye on these markets could unlock new avenues for growth and stability. As we wrap up this financial journey, let's circle back to the core theme: the importance of understanding the potential loss of the US dollar as the global reserve currency. This isn't just a topic for economists and policymakers. It's a subject that affects us all. From the price you pay at the supermarket to the stability of your investments, the ramifications are wide-reaching. Therefore, staying informed is not just advisable, it's essential. As the financial landscape evolves, so should your strategies. Consider diversifying your investments, keeping abreast of global economic trends, and planning with a long-term perspective. In a world where change is the only constant, adaptability and knowledge are your best allies. Thank you for joining us on this deep dive into the world of global finance. If you found this video enlightening, please hit the like button, subscribe for more insightful content, and don't forget to check out our latest video for more financial insights. Remember, at Investify, we're not just about information, we're about empowering you to make informed financial decisions.